Hey everyone, Coach Investor back to another video for today. So let's talk about one of my favorite companies of all times, Disney. They reported earnings yesterday. Numbers were incredible, beat across the board, whether it's subscribers, whether it's earnings per share, revenue, you name it, they beat it all. Also, the parks are again profitable, so that's great to hear. They announced a couple of things during the earnings call. One is that they're going to have a Disney Plus Day in November, I think November 12th. They're also announcing that share repurchasing and dividends will come back only when the situation is more stable. So obviously not until this COVID situation gets resolved and the business is back at where it was before COVID. Disney Plus churn rate is actually declining, so that's great. They're also implementing new technologies, new services for people, for guests that visit their parks through Disney Genies or through their new magic keys, you name it. Things are going certainly in the right direction. So before I jump into this video and go into the earnings report, I just want to thank today's sponsor, The Motley Fool. And again, these are my views and my views only. The Motley Fool is a company that provides investing insight and stock recommendations for investors of all skill sets and risk levels. You guys know I love finding new investing tools and resources to help me find the latest growth stock and innovative company. And right now I have a discount for one of my favorite services, the Fool offers. Through the Motley Fool's stock advisor service, you get access to a ton of expert stock picks. Every month you'll get 2 picks that are aimed at growing your wealth and to help you realize your financial goals. Stock advisors' average stock picks have returned over 500%. If growing your money is something you'd like to do more this year, you can visit www.fool.com/couchinvestor or click on the link below for access to my special offer and decide if Stock Advisor is right for you. Now let's dive into this. Alright, so first up we have a revenues of $17 billion. Earnings per share, by the way, were 80 cents, beating the estimates of 55 cents, so great on that. So the revenues increased 45% year over year, but actually it is still down from the same quarter in 2019, as you can see right here. But that's normal because, well, the parks aren't always fully operational. Total segment operating income up more than 100%. Net income from continuing operations in the positive as well. So all of that is great to see. Then we have here the different revenue sources. So we have $12.6 billion for Disney Media and Entertainment Distribution, up 18% year over year. And then obviously again, a more than 100% increase year over year for the Disney Parks, Experiences and Products. Now obviously going into what made Disney the biggest Netflix competitor out there is their streaming services. Obviously they still have their linear network, which is still the biggest there, close to $7 billion, only a 60% change year over year. Now direct to consumer is up 57% year over year, so that's great. Revenue for that segment, $12.6 billion. Now you can see in operating income that for linear network, that's actually a decrease of 32%. We've been talking about this aspect, whether we talked about Roku or the Trade Desk. Linear TV is going down. So ad spending on linear TV and linear network is going down as well. And Disney is obviously feeling that, but that's why they have Disney Plus. So they actually say it right here. You can see here again, the 37% decrease in domestic channels. Say domestic channel revenues for the quarter increased 13% and operating income decreased 37% to $1.8 billion. The decrease in operating income was due to a decrease at cable and to a lesser extent at broadcasting. The decrease at cable was due to higher programming and production costs and to a lesser extent an increase in marketing costs, partially offset by higher advertising and to a lesser extent affiliate revenue. Right, now let's jump into the numbers for the subscribers because these are actually extraordinary. If you know, the analyst, Disney itself actually, I think, estimated that only by 2024 will they have around 94 million subscribers. They are well past that number. So you can see here that Disney Plus right now has 116 million subscribers. Again, over 100% change year over year. ESPN, almost 15 million, up 75% year over year. Then Hulu, you can see here the SVOD, the live TV, all increasing quite nicely. So a total of 42.8 million on the Hulu channels. And you're going to see why this is very important, because if you scroll down, you can see here the average monthly revenue per paid subscriber. Disney Plus still one of the cheapest out there. But again, like we mentioned it in past videos, it's super cheap because of the countries that they are entering right now, whether it's India, Malaysia, Indonesia. So the pricing there is super, super low, and that's what's bringing the overall average monthly revenue per user down a bit. But this again shows the pricing power that Disney still have. They can just increase that by $1, $2 in the next couple of years, and that will just bump their balance sheet by a lot. ESPN Plus has increased by 7%, and then you have your Hulu. Look at the big difference between the average monthly revenue per subscriber for Hulu services. $84 for the live TV plus SVOD. That's also an increase of 23% year over year. So there is some way to go in monetizing those Disney Plus and ESPN users. Alright, to conclude, if you ask me, everything I just read in the earnings report, everything I heard during the earnings call just screams bullishness. I'm extremely bullish on Disney. I love how they aggressively invest in their new services, reinvest in their parks to maybe improve the experience for the guests, digitalize that experience, use that data to improve their services, and obviously improve the overall experience of Disney fans. Disney Plus just keeps surprising everyone. I'm super excited with the new content that's coming out. I'll be super excited on November 12th on Disney Plus Day. Very excited to hear what they're going to announce there. So obviously I'm staying extremely long on Disney. I don't intend on selling one single share. Now let me know down in the comments below what you thought about this Disney quarter. Are you planning on going to Disneyland, Disney World this summer? Let me know down in the comments below. That will be it for this video. If you liked it, consider leaving a thumbs up. If you haven't subscribed to this channel, maybe hit that subscribe button. As always guys, take care, stay safe, and see you all in the next video. Bye bye.